Our first panel will highlight the latest trends and innovations in the financial sector from the standpoints of global fintech leaders, as well as address the fast-changing shape of the market. Let's invite Rita Makhoul, Managing Editor at ArabNet, on stage to lead the discussion.
Hello. Before we get started, we just want to first play a little video about the fintech ecosystem in the region. A lot of it is based on a lot of research done by ArabNet. I'll be right back. I'd like to welcome our panelists to stage. We've got Farshad Noshadi, who's VP of Saman Bank and VC, level 39 fintech from London. Can you please join us on the stage? Farshad is VP of e-strategy at Saman Bank. He's been helping the bank become one of the most innovative technological banks in the Middle East and one of the most used online payment gateways in the world, plus a lot more, and we'll get to know more of him in a bit. Also joining us on stage is Elizabeth Lumley. She's Managing Director in Thought Leadership at Rainmaking. Liz has spent over 20 years working in the financial technology space, most recently as Managing Director at Start Bootcamping, FinTech London, and as an editor at Financial Services and Technology Newswire, and more. Thank you. And last but not least, Aaron Oliver, Head of Digital Commerce, Middle East, Africa. Hello. At MasterCard. In this role, he's responsible for the development and execution of MasterCard's regional digital commerce commercial strategy in order. We'll get to know a bit more of him in a bit. Thank you. Hi, thank you for joining us today. Before we get started, can we get just like a little introduction, a bit more of what you guys do and just some brief history? Aaron, can we start with you?
Yeah, sure. So I work for MasterCard in digital commerce, and what digital commerce really means is transactions in a digital format. So everybody knows about cards and POS terminals. Everyone knows that the world's moving away from physical means of storing value and moving into the digital world. And really my role is to try and enable that ecosystem to transact through digital means without plastic or POS terminals. That's really kind of what I'm looking for. Whenever we look at for how we're going to do that, we look at the existing ecosystem that's out there, it's really important when we look at the new disruptors that are out there, finding and changing the new ways, and then also being able to connect that to the traditional ecosystem that supports it from a risk and processing perspective.
Sure, I work at Rainmaking, and we're a corporate innovation consultancy that works with bridging the gap between corporates and startups. And we also run the Startup Bootcamp FinTech Accelerator Program, which is Europe's largest startup accelerator program. And we run the FinTech program in London, New York, Singapore, Mumbai, and soon to be other cities. So we work with startups in the financial services space. We help accelerate them, and we help them form partnerships with large banks. And our partner banks include Lloyds Banking Group, Rabobank, DBS, Santander, Deutsche Bank, among others.
Excellent. Good morning, ladies and gentlemen. I'm Farshad. I originally was born in Iran, but I brought up in England. I've been for the last 25 years, I've been very much involved in Lloyds Financial Services, connecting up all the different types of banking systems, the stock exchange, dealing platforms, and I've seen an amazing transformation taking place. And for the last 10 years, I've invested in a bank in Iran, which we've actually managed to put in a lot of these technology innovations that we begin to see. And I'm proud to say we're one of the first internet services. We noticed the importance of set up a credit rating agency. We went and set up one of the first electronic documentation platform. We did a whole bunch of issues that I'm now beginning to see really answer in many ways. Also part of Level 39, which we also claim to be Europe's largest fintech accelerator program. Everybody's saying it. It's just the tip of the...
We're an accelerator, you're a working space.
Oh, we're working space. okay. Let's move on. And I've also was one early investor in Google. I do quite a lot of work in San Francisco with Google Finance people. Wow. Every time I go there to Google I/O, the innovations and technology in the financial area is just amazing. Every year, it's like Moore's Law. It seems to double in terms of what is being achieved. And I'm part of, as I said, Level 39 and also Plug and Play, which is one of the largest fintech accelerator programs in San Francisco, which are now opening in Paris. I'm beginning to see a tremendous transmission or transference from UK-type fintech startups and moving more to the European-based because of maybe Brexit issue. So I would say for the last 10 years, I'm beginning to, every month I get like 20 different fintech innovations and ideas, and I either invest in them or advise where they should go in the future. Unfortunately, 70-80% of them, I think, probably don't have much of a future. There's very, very, very few that you now find innovative. So we can talk to you a bit more about that.
We'll touch a bit more on that in a bit. Sure. Before we continue, I just want to make sure, does everybody in the back here as well? Or we're good? Okay. Are you good? All right, before we dive into what makes fintechs innovative and what is good and what is not from the stuff that you've been seeing around, I'd like to first jump in from all of the fintech startups that you have been witnessing recently. What do you think, in your opinion, are the top 3 fintech trends and innovations that you think will be revolutionizing the fintech and banking sector in general? Can I get your opinion, Elizabeth, on this?
Sure. So, I mean, whenever I look for trends, I, in a strange way, try and disregard tech, because technology is not innovative. It enables innovation. So the trends that we're seeing massively are a lot of fintech startups in the asset management space, and not all of them are robo-advisors, and also in SME banking. So if you kind of look at the evolution of what's been going on with banking over the past few years, look at areas of 2 areas in banking. One, where banks have traditionally ignored a business sector, so that's why you saw a lot of remittance startups come up 2 years ago. And then also in lending and SME banking has long been ignored by the banking industry, so that's why we're seeing a lot of startups in the SME space. And also look for what I call sort of unsexy startups. So look for a bit of friction in the banking process. So a lot of our startups are people who come from the banking sector that see a problem and build an app to solve that problem internally. So they're not the big, consumer-facing, general press-friendly startup, but they're something that's really going to make the banking industry and infrastructure much more efficient and easier to work with. So I'd look for those 2 areas.
Farshad, you also just mentioned that you try to find fintechs that are like innovative and problem-solving. What else do you think we should keep an eye out for? What kind of trends and innovations should we all watch out for right now?
That's a really good question, because I always think we've only got one life. Let's make sure we make the most of that life, put our resource on something that has a future. I'm always trying to, more interesting, avoid the cul-de-sacs, the projects that are probably might hit a business dead end in the future. I look at things which are not just me too. I do the same thing that other people do. I'm always looking for innovative. The main thing is, ask yourself, what I propose, is it going to create a more convenient environment for my customer? Is it something that they're having a real pain? Is it something that they've got to do like 20 clicks when I could come up with an innovation that will do 1 click? I think it's all about convenience. Also, it's about motivation and also being well-financed as well, because the difference between failure and success is a very, very, very small line. Unfortunately, I see, as I say, 70-80% of the startups, particularly in the fintech, failing. And I think there are 2 battles taking place here. The fintechs, the innovative young people coming up with really, really interesting ideas, going to be squeezed with the banks who realize, my God, we've got to wake up. These fintechs are potentially taking out our market. We talked about how lending, foreign exchanges are all being taken away. The banks are now coming in big stream. I mean, I'm part of a number of different bank accelerator programs. On one side, trying to capture some of their market that maybe they're losing. On the other hand, what do you think is the other biggest threat to fintech startups? And in my opinion, for what it's worth, is technology providers. I see the Facebooks, the Google, the Amazons coming up really, really aggressive with their 1 billion customer, 1.5 billion customers. They can easily adopt and acquire a lot of the technologies. I see the biggest threat really for the banks.
Let's look at the opportunities before we get to the threats for now.
But in terms of technology that I think are really leading would be things like blockchain, virtual reality, augmented reality, creating touch and voice, really interactions, all about convenience. If people who can sort of pioneer and develop. But these things require a lot of effort. Sometimes I find in a startup, are under-resourced, and they want to take on some really, really big tasks, which unfortunately will then maybe be adopted or taken over by some other people. So it's always very, very difficult to identify which is a good startup. As long as they're adopting, I think, a technology that's going to really develop in the future, and not just saying, I'm going to do what everyone else does, but slightly better, I find that those will be more problematic.
Right. I want to hear from Aaron as well. I'm sorry.
Hi.
Hello, Aaron.
How's it doing?
We have to turn with
It's
this
okay.
mic.
It's okay. I'll be here all week.
Well, give us your opinion right now.
Yeah, I mean, it's when you say, what are you looking for? I agree. Technology in lots of ways is irrelevant. Today it's a plastic card, it's cash. Tomorrow it's digital, it's Bluetooth, it's mobile, it's digital identity, it's whatever. It doesn't really matter. When you talk about financial services, you're typically talking about low margin, right? And if you look in our region, the only way to survive on low margin is scale. And if you look at the varied regulatory environment that's around this region, and you look at where the people are that then have money, right? There's financial inclusion, but you can only include people that have money. People without money, that's not a solution for fintech. But the reality is so how do you scale? You've got kind of two choices. How can I scale this business and solve a problem? I either need to solve a problem that is a matter of pain, right? So as a customer, I'm going to switch from something I already do to this new thing because of a pain, or a problem that's not being solved where, as you say, the banks aren't necessarily addressing SMEs very effectively. Social selling is very difficult. It's something that's done in cash. But where is it that I can solve a pain? Where can I find a underserved community? And then how can I scale to a point where I can then survive and interact with the financial services ecosystem? Everybody thinks that fintech is all about, this mass customer base, and the reality is that it's very, very distributed. Look at the number of banks that are sponsoring here in just one market. If you start looking then around the region, the number of banks that are out there, the number of people that are providing services, you have to be able to get your customer base to then interact with the rest of the customer bases and find a way to then either facilitate transactions, or what I think that people should really be looking for is payments 2.0, which is the bundling of high margin services with payments. So if you take a look at the Careems, if you take a look at the Ubers, they've gone with convenience. Payments is bundled in. It's invisible, but the margin isn't in the payment. They're not necessarily payments or fintech companies, but what they've done is they've grown their customer base through the use of digital payments as a primary method.
Okay. You've mentioned banks, and I want to discuss banks in the region and globally. And we've seen the relationship between banks and fintechs evolve. I want to get your opinion of how that has evolved, how banks have started embracing fintechs today, and what roles do you think they should play in fintechs?
Well, I mean, everyone says you're going to kill the bank, right? And there's truths that are out there, right? So, and this will take a lot longer to disrupt. But the first thing is that the central bank creates money. That's not going to change. And then the only people that are allowed to hold money are actually those with banking licenses. That's just the way it works. So even if you have a U.S. dollar account here in Lebanon, you don't actually have a U.S. dollar account here in Lebanon. Your U.S. dollar account is actually with a co-party bank that's in the U.S. that's holding it. And so that regulatory framework is effectively where killing a bank is very difficult. Now, you can eat into their profit margin. There can be fewer banks, and that is something that can happen. So their space where they make money is not necessarily sacred, but you're not going to kill the bank. So the opportunity that people are starting to see is where a bank maybe can't operate as efficiently given to its size or its bricks and mortars or its ability to maneuver. People are really looking at the co-create method. And, the interesting thing about accelerators in my world is accelerators are there to protect the investor's investment in the company that they put their money into. That doesn't help me as a bank or as a MasterCard. What I want those companies to do is solve my problems faster. My problem is cash. What can a fintech do to take cash out of the system and create electronic money? The accelerator doesn't necessarily do that for me. So I think when you start looking at these co-creation things, I think that we're going to start to see accelerators also then kind of morph into these sort of also corporate problem solvers, where they can bring these communities together. Where they can bring these communities together and then solve the problems, whether it's a government problem, it's a banking problem, it's a payment service provider problem. That's my thought.
Elizabeth, I feel like you've got something to add to that.
Yeah, I mean, the way, I mean, that's exactly the road that we're going down, completely. Because, you know, we're dedicated to helping the startups, but at the end of the day, if they can't get a pilot or proof of concept for the corporate, they can't validate their business model. But, you know, what happens in banking that's different from other industries, you know, you look at, they have almost no R&D. You know, the idea of not doing that in the automobile industry or the pharmaceutical industry is ridiculous, but in banks, they can't actually go out and test their products the way other industries can. So they can partner with fintech startups to almost outsource that R&D function and let that testing, that validation process go forward. Where we have found back and forth is that you know, the startups think that they're just going to walk into JP Morgan and they're a 4-person team and they're going to buy the product, and that's never going to happen at all. But with the bank, they need to understand, you know, they need to offer some sort of value to the startups as well. So it's a mutually beneficial partnership. We'll bring you in, we'll help you do a pilot, we'll help you do a proof of concept, we'll test your validations, and the startup gets that validation so that they can possibly build up to a bigger than 4-person company. So that's really, that road, this idea that startups are going to come in and destroy the financial services industry and a new great financial utopia is going to rise up is bull, and it's not 2012 anymore, and that's not going to happen.
Can I ask you to be like, and get the perspective of the bank over here? Like, what roles do you think banks should play? How should they embrace them in? Is it a threat or not? And more on the challenges banks face when it comes, like, you've got to be more agile, and there's that legacy infrastructure that, if I may say, outdated and archaic infrastructure that's there that makes it a lot more difficult for them to evolve. Can we get your 2 cents on that?
Excellent. I slightly disagree with my colleague. I think there's going to be, a radical change that's coming up here. I think there's a big changes heading, and at the end of the day, fantastic convenience for our customers and for our clients. I think that there is a quite a little battle taking place. I see banks, including some of the banks I've worked with Barclays Bank, I've worked with Deutsche Bank for many years, I work with a number of banks in the Middle East, and I can see they have an attitude, and fair enough, their employers have a sort of, I get my wages, I get my pension, and I know this is my strategy. But there are technological changes. For example, a few years ago, we didn't have a 4G or a 5G network available for everyone's smartphone on the street. So there could never have been an Uber or a type of Airbnb. There are technological changes that the banks, I suppose, historically weren't aware of. And I think the fintechs are undermining the tech. For example, look at the P2P. I was one of the mentors on TransferWise. TransferWise has taken away such a potential market on the personal-to-personal foreign exchange transfer. The HPR Lending Club was talked about. And I see, in fact, I think it was Citicorp saying that they reckon in the next few years 30 to 40% of their staff might be made redundant. This morning I heard HSBC announcing that the profits are down 80%. And there are branches closing all the time. I think that banks are have to make a very rude awakening. There is so much overheads potentially associated, particularly the ones with an enormous number of branches. I'll talk later on this evening at 2:30 about why I still think you need branches. You still need the credibility. But I think that the fintechs are about to dislocate the market, and you'll be surprised. I think you underestimate the radical change that will be taking place in the sector. Then the thing for the banks to do is to adopt and encourage some of the appropriate fintechs that will maybe enhance, because the banks have got credibility. The banks have got the appropriate licenses, which the fintechs don't have. But the fintechs are adapting to the new environment, which sometimes the banks cannot adopt. Sometimes within the different departments of my banks, people just don't have the vision. They just say, we've always done it this, we've always got this form, we're not going to change it, this is what our customer wants. Whereas the fintechs I see have come in I always see them as like very smart little speedboats moving in every direction, whereas the banks traditionally tend to be the sort of big oil tankers moving in some way. I think there is a big change coming up, and the banks can also adopt a lot of this. And that's why I see, for example, Barclays Accelerator Program, Deutsche Bank, many of the banks setting up programs to basically adopt and absorb some of these technologies and to make their service better.
Do you think TransferWise is going to be around in 5 years?
Very good question. I think it might be acquired.
I want you to call me.
It might be acquired by maybe some other technology providers, people like that. But I think the concept is here to stay, and the concept of, to be honest with you, for many, many years, I believe the banks have had it really, really nice. They've had this, the buy and sell rate and foreign exchanges have been monopolistic. But I think with technology, transparency is improving. I think the costs to our customers is improving significantly. So we have to now work for a tighter margin. And these startups, I think, are showing the way. And you have to compete. If you don't compete, then people are less loyal. Not that I've always been with this bank or always been that bank. People are just going to go for the best type of services. And that's why I think there's a big dislocation coming up.
I mean, I wouldn't disagree that the way people consume those services or that retail banking won't go through disruption. The idea that, the number of branches are required is completely not necessary, especially when you look at how cash is used in more developed markets. In places where there's cash used, right? ATM, don't forget, was a innovation, right? Don't forget SWIFT used to run on the fax network. So the
Still does.
Yeah, they've switched it to IP, but still, it's still sad. But the idea really that for Lending Club, where do they get their money? Right? So Lending Club has to lend. They don't get all their money from peer-to-peer, right? That's just false. They get their money either from investors that expect equity in return, which is not sustainable, or they get their money from banks and institutions, right? Who either give them a line of credit or provide them some other sort of financial product, financial services product. Somebody has to take the risk. And whenever you look at risk and who is best at taking risk, pricing risk, especially in large values, maybe the banks don't have to service customers as well, maybe high net worth customers. Maybe you start looking at the M-Paces of the world that service the bottom end of the pyramid from a transactional place where it's not cost effective for retail banking to do it. But if you look at banking, retail banking is not where they make their money. So the reality is it's just going to be a more cost effective, better quality service that's going to be bolted onto the front of retail banking. And so from an outward perspective, I would think that you're right. You're going to see some significant changes. But from an inward perspective, who's going to make the money? I personally believe the banks will make the money. There'll be some disruptors. Perhaps there's some new financial services providers that will make the money and fund some of these things. But, TransferWise, great example. If getting scale in the remittance market, you want to talk about thin margins, right? That is a serious challenge. If they crack that nut, they're going to be around for a long time. It's fantastic. Bitcoin exchanges are threatening to, change and challenge how that works, but then they don't really fit the existing regulation. People get together, they protect their own. It's going to be an interesting one. I guess when you look at it, maybe on the view, it'll look different. But from the back end, who benefits from the value creation? I still think it's going to be the big players.
Aaron, you've touched point a bit on regulators and policy makers for quite a bit, like a few times right now. And especially since you do conduct your business here in the Middle East, I'd like to get your opinion on what do you think regulators, what sort of role should they be playing in supporting fintechs and bankings and regulating? Like we just heard right now, the local regulators here, like Central Bank of Lebanon, are supportive and they want to push everything forward. And we've got all the banks with us here today, which is excellent, and it's amazing to see. It's a breath of fresh air, I must say. What role do you think they should be playing? How should they be moving forward as well? How should they push the banks as well?
Dangerous question.
Let's keep it generic and not touch on any one country.
It's tough to be a regulator, right? You're trying to control your money supply, first and foremost. You're trying to do consumer protections, right? That is not something where you should be making quick, fast decisions and just letting everyone pilot and try your products. Abu Dhabi just opened up a RegTech place where they have a sandbox for people to come in and try things with regulation, which I think is quite clever and quite smart, right? If you're going to screw it up where it's not real. The reality is when you let some of these things loose into the wild, blockchain, where does Bitcoin exist? Who regulates Bitcoin? If you're trading in dirhams or dinars or dollars, the central bank can put a stop to those transactions and ensure that you are controlling what's going on. When you start allowing too much too fast, it becomes very, very difficult. And the consumers love convenience. They love new things until their money goes away. And that then, you see it, what was it, I can't remember, there was a fintech startup where they were debiting people's accounts, but then debit. Klinkle, maybe?
No, in Germany,
something. Anyways, they were debiting accounts to load it into their system, and then they weren't crediting their system, and they basically just lost the money. I don't know if anyone here has anyone here ever lost a SWIFT transfer? Have you ever lost a SWIFT transfer? It's happened once to me. It's gone, right? It's left one bank down SWIFT. It hasn't been received on the other side, and it will take you about 12 years to figure out what's happened to it. So as a regulator, you have to protect against those types of things. So it's a challenge is what it is. You have to be open to it. You have to listen to it. You have to understand where you can allow money flow, because if money flows, that's what grows the economy, right? If you put everyone back into cash, money can't flow. The economy is stagnant. Electronic payments make money flows, whether it's business or consumers, etc. But you have to be careful. So I would say you have to listen, you have to learn, talk to other regulators, look at things like what they're doing in Abu Dhabi from a sandbox perspective, and really listen and learn.
Do you think there's anything in the regulations or in the infrastructures that should be changed since they're stagnating or they're slowing down the process of change?
P2P is the biggest complication, right? When you look at cash, if I have a $100 US note and I drop it on the ground, whose is it? It's nobody's. The idea that you can do some of these things at low values, I think is something that I would like to see adjusted from a person-to-person perspective at low values, for example. But I think P2P is a very interesting one. I think also then when we start looking at different models for allowing merchants to come on board, what is a merchant anymore? So traditionally in a lot of markets, a merchant has to have a physical presence, location of business. But if you're selling things online, if you're an individual that's doing social selling, it's very difficult to get into the formal economy. It's very difficult to get a merchant account and become a part of that. So I think the small, medium-sized businesses, I think the consumer-to-consumer type transactions are something that can kind of loosen those things up. But, again, I've never sat as a regulator with the worries and the concerns. So, listen to me with a big grain of salt.
Elizabeth and Farshad, is there anything from the EU regulators that you think worked really well in the EU or maybe didn't, or like it probably hurt a lot of the evolution that was going on?
You can go.
More ladies first. I think the regulators can really play a very, very important role in opening up banking services and also in enabling the banks to even do better. I always say, if you make the roads, if you make the transportation, people will come and build houses next to you. So I think the regulators should do some key things, opening up really the interfaces. We've seen that imperative in Europe. I don't know how many have heard of the PSD2, the Payment Service Directive 2. Oh my God. That is now, in the olden days, it was like, okay, the banks get a license from the central bank, and that's fine. They can then take people's money. But now we're looking at how do we get licenses to open our bank. So if I want to connect up to a bank, I've got to talk to that bank and the core banking system, the core requirement. Maybe we're very specific to that, the Bank of Aldi or the Bank of Bloom. It might be quite different. But if we can create a standard where all the banks in that country, basically, when I get permission, I can connect up to each one of these functionalities. I can provide such better added value. I can then reduce the cost of all these negotiations with these different entities. So I think the regulators I think are doing some, and you see that in Europe, and you see that in the UK, with this opening up the APIs. That will significantly, I think, help innovation. Also, the other thing that I see is that every country should have a standard national ID, which would be very, so everybody knows this person, and also standard credit rating agencies. These are core requirements I think the regulators can standardize, so everybody does a credit check, really KYC, really get to know this customer. And then, once you've got that standard, the regulators provide it, here's the security, here's what this, SSL, the secure socket layers are required, you can now provide access to these banks, and then you will see an explosion of technology, particularly fintech. And also, this is good, because one bank might want to, for example, I can go into one bank and log in, and once I've connected up with all my bank accounts, I can say, why don't you also look at my bank accounts at HSBC, at Blue, at Aldi, all in one consolidated way, if they all have standard APIs. We can, in fact, the banks together, I think the banks together can provide one of the biggest threats to technological providers. And that means working, don't see yourself as island, that the regulators can really enable and energize the banking sector by enabling together we are stronger. Divided, we shall be exposed to these fintechs that are coming up.
So there's a word you used that I wanted to point out, which is standard. Okay? So, when the FCA opened up Project Innovate, they did it because they were feeling they weren't getting a lot of information from the fintech startups. So they created this benevolent honeypot to bring them in to find out more about them. Keep in mind, the FCA is only concerned with consumer-facing fintech startups, which are about 10% of what we see at Startup Bootcamp Fintech. Then they came out with a sandbox, regulatory sandbox. And this goes back into the idea that it must be, if you want banks and startups to work together, it must be mutually beneficial for the both of them. The FCA had a lot of trouble luring banks into the regulatory sandbox because there was no kind of real benefit to them. There was no point to them. You talk about the PSD2. There's also related the CMA directive in the UK, which is aimed at the top 5 banks to open up their APIs. This is a framework-based directive, not a standards-based directive, which means the banks can interpret how they will open up their APIs. And if you know anything about banks, they're told by a regulator to do something, they will do the absolute minimum they can possibly do to comply with that regulation. So this great new financial utopia that everyone is looking forward to with the PSD2 and the open APIs, you need to understand that banks are involved in this world, and they might not open up in the way that you hope they will. So there's going to be a lot more work coming forward for that.
Sorry about that. We can take up some questions right now, but I wanted to touch base before we do take questions. In the beginning earlier, you talked about, because now I'm a bit confused by you. You think fintechs are a threat to banks, but you think there's a lot of threats towards fintech. Like you think fintechs are threatened. How are they threatened if they threaten banks? What threatens them?
Well, normally cash flow, motivation, because many of them are very, very low financed. There's a bunch of young guys motivated, but there's so many of them, and I'm amazed. Every month I get about 20, 30 another fintech coming up from London. But I see that there's going to be about 80, 90% of them will not be successful in the next few years. However, they're a fantastic vehicle for adjusting to the changes of the environment that we are beginning to see. But I would now invest very, very, very wisely and very cautiously in fintechs. It's just the way there's just too many of them, and many of them are just basically recreating what someone else has done. Very few of them do I now see coming up with real innovative ideas. And the banks are always now trying to also get involved and acquire those people. That's my word. Go ahead.
I think this is answered by, you look at an example like Napster, right? The first one who's successful gets killed.
Right.
Everybody else that follows through does great. So being first, you can succeed. You could become like Apple Pay is a fantastic example.
My next. Do you think these technology companies are going to be a threat to the fintechs?
Well, so Apple Pay actually helps in a way. It rides on the rails of existing corporates. It's basically a distribution system for cards. Now, they want money, which is a different deal, and they're huge, so they get to ask for whatever they want to ask for. But if you take a look at like the Android Pays, the Samsung Pays, the Apple Pays, they're not really financial services. They're really just a bit of a technology that's on the front of it. And trust me, people are trying to sell technology to banks every single day. So that's not really a disruption threat. But if you are going to be Lending Club, if you are going to be a blockchain remittance company, if you get any sort of volume whatsoever too soon, they're going to shut you down. They'll find a way. Now, if you get any sort of volume, then there's 12 people behind you thinking, okay, that worked. They're shut down. I know it's there. Now I just need to figure out how to not get shut down because there's money there. And out of the next 12 people that come out, somebody will figure it out. But the first person is done. So I think that's the kind of threat when it comes into a fintech, proper fintech, where you're actually servicing the customer, actually providing financial service. If you're just tech, then you're just a technology company. Temenos, for example, is doing all kinds of things, from a core banking solution to try and break it up into microservices and these types of things. But that's pure technology. If you're a Lending Club, if you actually need to provide some sort of a financial service, it can be dangerous to get too big.
You're agreeing? I thought you thought there were threats.
No, I agree. Amongst all these,
Second guy's a threat.
all these fintechs, there are a number of threats. I agree. And always the first person to stick their head up.
Yeah,
I mean, so
it gets it cut off.
Google wasn't the first search.
Exactly.
It was Yahoo and Ask Jeeves. What happened to them? Yeah. Exactly. But also, any successful startup is then often is acquired by bigger
I think
institutions.
that's sort of consolidation and fragmentation. We're seeing fragmentation, and then we're going to have consolidation. Yeah.
All right. To summarize, before we jump to questions, I just want to get your opinion, final words, sort of summary sort of thing. What do you think a fintech ecosystem needs to flourish?
It needs access to capital. It needs government involvement. It needs a raft of startups. It needs no Brexit. Okay. It needs. It needs. Yeah. I'm sorry. It needs, spaces, co-working spaces, accelerators, labs. It needs places for people to go. Yeah, but I mean, what's talked about a lot in Europe is access to capital. Which some people think is too conservative, and other people think it's just about right. But yeah, you need kind of those elements in place to have a startup ecosystem.
There's pillars.
Pillars, yeah.
There are pillars for any ecosystem in general.
Access to talent, access to capital, access to space, access to government, access to banks.
That's all very well. I completely agree with that. But the most important thing it needs, I think, it just is how am I going to provide convenience to a customer? What idea have I got that's going to make my customer's life a little bit more convenient? That, I think, is the key thing that's going to drive them, based upon the ever-changing technological platform that we're finding ourselves. And don't do something that other people have done. Maybe don't just copy. Come up with innovation. I think the most important thing a customer wants is convenience, convenience. What is it? You take 3 steps that I can then reduce it by 1 step. Then, absolutely agree. You then need to get the right finances, the right motivation. I see this thing with fintech so many times. The first 6 months, tremendous idea, fantastic, let's get an angel. And boy, after 6 months to 1 year, oh my God, the cash flow is running out. We've sort of got yourself a little bit of a cul-de-sac here. We don't need to find a second round. Have we got the market share? Do we have volume? That's when something hits the fan. So the important thing is, as long as you've got a fantastic idea of this, and I always look at the organic growth, not just somebody's put $1 million and you put advertising and billboards and everything. So look, my volume's really gone up. But that's no good, because as soon as you stop that, you will go down. What you need to do is to see, really, do people like your new stuff? Are you dislocating? Are you constructively disrupting the business? If you are, you will see that organic. Oh, I told my mother told her auntie told her, I don't know, whatever. And then you see that growth, fantastic idea. That's the time now to, I think that's one thing, and also work together with the banks. The banks are desperate to come up with innovations, dislocations. Partner with them. Build up a relationship, get maybe some of their licenses, so you can actually say, I'm proud to say I partner with this. But then I always say, don't always work exclusive with the bank. because people are very, very flexible. They might want to move to another bank, so always keep up your options.
So be innovative, solve problems, be convenient.
Exactly. Number one, convenience.
All right. Anybody else got something to add, or shall we jump to questions? Because we're running out of time right now. I've been getting signaled and waved and... Yes, thank you. Any questions?
Charles Carcourt from Banque Libano-Française. I would like to know more about MasterCard roadmap and global strategy to bring their MasterPass and mobile payment solution in Lebanon. What is your roadmap? Because as we see now, mobile payment is a bit far away idea from Lebanon. It gets launched all over us, and here we are far behind. And I've read about MasterPass solution and their own tokenization system. So what is the general roadmap for it to reach Lebanon?
Yeah, I mean, you know, again, MasterCard products are kind of complicated and difficult, and it becomes the thing that becomes very interesting. It's identifying the exact reason why it's difficult for a fintech to work with someone like MasterCard. A fintech is trying to solve a problem typically in one place. When it comes to a product like MasterPass, for example, I have to take a product and I have to go globally right away, right? So whoever has that MasterPass button up, it has to work everywhere, every time. People get used to this dial tone type thing of your card. You know, being able to, you stick it into the terminal and it works every single time. It's really annoying when I do mobile payments because mobile payments are more complicated than that. So the reality is that, you know, we take these things and we roll them out globally. And a lot of times it depends on what's happening and where the ecosystem is. So, for example, we look at MasterPass. What's the point of it? The point of it is for a more convenient e-commerce. But the reality is that we need e-commerce to be at a certain level before you can shift those people into a better version of e-commerce. There's no point in giving people a better e-commerce if they don't have e-commerce. Now, by the time e-commerce is at a level in this market or any other market where MasterPass may be relevant, MasterPass may look significantly different. We have lots of investments in different fintechs. We have lots of different things that we do from a mobile perspective, from digital identity perspective. At the moment, you use a wallet that's online, and it's effectively a card on file solution. But in this region, everything's mobile. It has to be mobile, otherwise no one's going to care, no one's going to use it. So you don't really want to bring something to people that they don't want. You know, that's people have been doing that for a long time. You know these tokens that everyone gets to be able to log into your bank, right? That they force you to use. I don't want to do that. Yeah, no, I know. I've got like 7 of them, right? So I don't bring things to kind of force people to do it. So if I don't think it's a great solution in a certain market, then we tend to kind of hold back. But then when we do it, again, like I don't bring it direct to the consumer. So there's a number of banks that are interested in doing these things. You see the idea of it, but the reality is that you want to drive e-commerce. You want to drive commerce. And so it's not the product or tool that drives commerce necessarily. It's really about what do your customers want. And at this point, I would say there's probably a couple more iterations around that product to make it much more friendly on the mobile. I mean, it's going really fast. There's lots of other things out there. You know, we did a deal with Samsung for MasterPass, so that Samsung Pay is going to allow you with your mobile to be able to use it online for MasterPass. So
that really was a fully loaded question, wasn't it?
No, I know it's super loaded, but again, the idea behind it is that we look for partners for how we can make that happen, so that people want to use it. It wasn't supposed to be a MasterCard commercial. It was supposed to be.
No, I'm just sorry because we're way over
But
time right
sorry.
now, and I've been getting signaled again. But thank you for joining us. Aaron, Elizabeth, and Farshad are going to be around, so you guys can ask them questions afterwards. I'm sorry we took our time over here. Stalk them afterwards. They'll be fine. Ask them anything you want.
Nothing embarrassing.
Thanks.
Thank you.
Thank you very much. Welcome.